Let's welcome on board the management of Viatech Vabag. We've got Skanda Prasad Sitaraman joining in on the show right now. Skanda, great to have you on the show. You know, you've seen a revenue decline again this quarter, partly, I guess, because of your European operations. Where do you see the business headed for the fiscal? What's the guidance that you can give us?
Very good morning to you and a very good morning to all your viewers. First of all, thank you very much for the opportunity for this interaction. Yes, we have degrown for this quarter, but what we need to understand is on an annual basis, and I want to make this very clear, we will grow. There is no doubts about it. And we will grow despite, one, as you rightly said, the European operations, which we divested strategically because we want to focus on the emerging markets, invest the resources that we divest from the saturated markets and take it into the emerging markets. Number two is our focus as far as strategy is concerned has moved from more EPC to EP. And when we do more EP projects, the top line is going to be a little muted, but we'll have better margins, better cash, and better control over time. And the third most important thing, as you know, we had two large orders during the end of last year. And these orders achieved effectiveness towards the end of H1. So the revenue expansions will start during H2 and follow into the next couple of years. So growth, I want to again repeat, is going to be there for the year, and there should be no doubts about this.
Some growth in FY24 despite the sluggishness that we have seen in the first half of the year. But let's talk about your margins as well, because at the start of the year you had guided that you're looking at perhaps having a double-digit EBITDA margin by the end of the year. This quarter, of course, we've seen that number. But my question to you is, do you expect it to be sustainable around that 14-15% mark then?
We have a good mix of EP and EPC projects, and also the O&M projects are growing in the book as well as the revenue. So the margins are bound to be better. Over the last 2-3 years, you've already seen, as per our commitment to the market, we have been delivering double-digit margins. This year, we have been over 13% of margins, better than last year. And these are going to be absolutely sustainable over a longer period of time. We have very, very good projects in our book, which are multilaterally funded, which are sovereign funded or LC backed, good payment security projects, and also good mix of EPC and O&M projects. So the margin you've already seen in the last 2 quarters, it is going to be sustainable over the year and going forward.
So that was about the margins, but I also wanted to get a sense from you on the order inflow picture as well, because that continues to be robust, almost 1,200 crores this quarter. The order book is also strong at 12,000 crores. But talk to me where the incremental order inflow is coming from, because water infrastructure was, of course, one thing that was doing well for you. And then GCC or the entire Middle East project seems to be coming up as well. Talk to me about the breakup in terms of order inflows.
See, we have a very robust order pipeline. Water is a sunrise sector. There's not going to be any dearth of orders. All governments are focused on improving water security, and we are a leading player for the last 100 years in this market. As we said, India will continue to remain our base, but the next growth engine is going to be Middle East and Africa, where we are seeing wonderful traction, mainly in KSA with the amount of infrastructure investments that are being undertaken. We are at today, 4 or 5 large bids are already being evaluated in this region, and the pipeline is looking very strong. You've already seen we have booked one order in Tunisia, which is an expansion of our business there. This is a 63 million euro order that we have booked along with a consortium partner, EGMS, who will do the civil. And as per our strategy, we will stick to our portion as EP, followed by an O&M. So the order pipeline is very robust with advanced technology projects, EP projects, industrial projects, and O&M, which is our base, both in India and more importantly in the Middle East and Africa region.
So So that was about the order inflow as well. But you talked about, the desalination plant, the pickup that is happening from the second half of the year. But some of the international projects, Tunisia, Russian projects, they were seeing some headwinds, I believe. Could you give us an update on that?
See, in fact, our driver has been EP projects, both the Russian project as well as the other projects that we have in our book. We're not seeing any headwinds over there. They are going strong on timelines and delivering the expected revenues and margins. It was always known that both the desalination project as well as the sewage treatment project, the large ones that we booked towards the end of last year, would take time for activation because these are multilaterally funded projects. So it takes time for establishment of the LC and the next steps for the customer to complete the condition precedents. While we get a head start in terms of doing work on engineering and start up the procurement, which we have already started. So our effectiveness came towards the end of H1. And that is why I was mentioning that H2 will see a sure growth year over year. And we will see the next 2 years, especially from these two projects, seeing a very good revenue expansion.
So point taken. On that note, we'll let you go. Appreciate you making time and speaking with ET Now. So that's the latest commentary coming in from the management. Margins sustainable above the 13% mark, and on FY24 basis, there will be a revenue growth despite the sluggishness that we have seen in the first half, because a lot of these projects will actually start contributing to the revenue in the second half of the year. The stock holding up with a gain of around 2%.